right? If you agree, type a 1. If you not agree, type a 2. Meaning that if you are using robot, surely you can move away from emotional mistake and never ever going to have emotional mistake forever. If you agree, type a 1. If you not agree, type a 2. Now, let me share with you a case study of my students with using robots and how he is using it. Ali is one of my student. Okay, so he is actually using the robot to do the trading. And I want you guys to imagine you as a shoes of Ali, right? So Ali joined Alpha Muscas earlier, then he did use the robot to do trading. And the way that he do trading, right, he do optimization, he do back testing, he follow everything that I do. In the end, he get the robot that is 60% win rate, which is pretty good. Sorry, 70% win rate. And 70% win rate, what he do next is that he apply this into the live market and then see how does it work. Okay, so when he applied, this is the result. Day one, right? Day one, profit, then loss, then loss, then loss. He started to text me, Ethan, can still work the robot? I said, can, just leave it. Then lose again, lose again, lose again, lose again. He said, alamak, I lose so much money. Ethan, I think the robot doesn't work. Alright. I'm so afraid that to continue to use the robot, I think that the robot doesn't work. So he decided to stop it. And guess what happened next week? I asked this Ali. Ali, just use it, right? The robot is just working well. Then the next day is winning. Then losing again. He tell me, you see, Ethan, robot is always losing one. I say, no, just apply it. What happened next? Win again, win again, win again, win again, win again, win again, lose one day, win again. Now, if you take a bit of mathematical calculation, in fact, you will calculate that the win rate is indeed close to 70%. And then he started to see this result. Macam yes or Ethan is right. No lah, they will say that, I should enter, I should not listen to Ethan one. Then what they do, they feel like a bit FOMO. So they start to see that, you know what? I refer back to the previous strategy. I think the reason why I'm losing my money is because of my stop loss. It's because that I'm having stop loss, that's why I have consecutive losses. Okay? And I decided to remove the stop loss strategy. Okay? And then I am going to double up the lot size for the robot. Meaning, same strategy, double up lot size, remove the stop loss to do it. And now it become first winning, third winning, losing, winning back. And at this stage, right, he already break even from the previous losses. He said, yes, I knew it. I know this is the right formula. Then next one, winning, lose, here, margin call. What is margin call? Margin call means you lost all of the money that inside your account. And this is what happened to real life situation. Okay, this is indeed a real story. In fact, if he doesn't change anything, alright, the next two trade is actually a profit trade. And if he doesn't do anything as well, this day itself can also still back to break even. Meaning he can make back profit one if he doesn't change anything. So this is Ali. And then what Ali do? Ali not happy. Alright. He said, it must be a luck problem. Then he go and ask his friend, hey friend, okay, right now I ask A, B, C friend come in. Then each of them I help you to deposit 10,000. You got to use the same robot that I'm using just now, 70% win rate. Okay, 70% win rate. And then we are going to set a high risk setting. When you profit, this robot profit 20%. When you lose 20%. So what it will end up for trader A, you win, win, loss, loss, loss. Trader B, loss, 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 then win, 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 win. And then trader C, win, win, loss, win, win, loss, win, win, loss, and then win. These three traders having the same strategy but just apply at different time. Right? They use the reward at different time. Questions: A, B, or C? Which of the trader will be the most profitable one? Type into the chat box. A, B, or C? Which one is the most profitable traders? Okay. I give you guys one more answer. Like, if you think that it's all the same, right, you can type the same in the chat box. A, B, or C? C, B, anyone? Okay. C, A, or B, or C? Right, type it into the chat box. The answer for here is that essentially, right, A, B, and C is the same result. A bit hard to understand. If I plot the result here into Excel, it looks something like this. When they get started, they all start at the same 10,000, right? So A is consecutive winning, right? So it consecutive win all the way, and then it will lose the money back. End up here. If it's B, you lose all the way down, and then you go back to consecutive winning, back to the same point. If you are C, win a bit, lose a bit, win a bit, lose a bit, win a bit, lose a bit, win a bit. And you will end up the same point as well. What does this mean? This means that all these three traders have the same result. And essentially, their emotional state is different. A, the one is the most legendary. Every single one of you want to become A, right? Every single one of you hope to become A. Because at one point, A is the one that can make the most profit. At one point, it's about making 300% ROI. But A doesn't withdraw. It just lost all the money back. If you are A, what is the feeling on you? Frustrated, not happy, unsatisfied with the result? If you are A, that is you. If you are B, you have lost all the way back. At one point, you are the worst trader in all the people. 50% roll out. Very, very bad. And if you compare with others, right, you are the only one that is losing. What would you do? Disappointed? Give up trading? But if you give up, you cannot go to the same ending point. C, this one is the one that have most answer in the group. We call it as the most consistent, perfect result. Okay, win, win, lose, win, win, lose, win, lose. It's always like robotic result one. But then you have to take a truth. Trading big profit is not for you. You see, you only make a small profit, small profit, small profit. And when you see other people like A, wow, 300% in a month, you start to shock. Wow, yeah, why other people can achieve 300%? Why I cannot? Then you start to learn another thing. And you learn like A, wow, indeed can profit so much. Then in one go, you also lose a lot. Can you accept it or not? If you are A. Then you cannot accept, then you go to C and B. Not bad when I'm losing, B is making money. Then you start to learn about B strategy. You learn about B strategy, win. But at one point, you never know. You are going to have consecutive losses all the way to 50% roll down. Then you go back to C again. C can profit slowly. But you look at A, ayo, so much profit. Look at B, ayo, so consistent, always winning one. You feel about kanjiong. In the end, right, this is a journey that all traders will go through, regardless A, B, or C. And all these have an emotional homework that you have to be practiced on. If you are A, you got to learn whatever that you take from market, one day the market will take back from you one. Okay. B, you have to be determined enough to be surviving in the trading. If you're not determined to continue to put out the process, you are going to miss out the bigger opportunity later on. And for C, you need to have the right expectation, be patient, and stay strictly throughout the game. If you can do that, congratulations, you are on the path to success already. That's what I want to say. If you understand what I'm saying, right? Essentially, all the mathematics and analysis has already been done for you, which is to solve the emotional problem for you that is directly evolving in the trading. But 20% of time, okay, if you don't understand and don't have clarity what is the robot doing, if you don't understand the number behind the trading game, if you don't trust the robot just because that you don't know what is the robot doing, eventually, right, you are going to put the emotion back to the robot as well. And hence, that will incur your result inconsistent. That's why I always said human and robot have to work together to fight for the best result. You have to work together with a robot to always boost the best profit one. And in order for you to do that, the only way is to understand how does the robot work and how to make it consistent. The answer is that when you understand more and more about the robot, right, you can get in, you does not need to learn through coding, right? You don't even know how does the strategy behind the scenes work. At least you just need to understand that what is the logic underlying when it will buy and when it will sell. Okay, you just need to roughly know that how does the robot operate. So when the robot come in, it just do the execution part. It just do the buy and sell in the market that on your behalf. You still have to do the bit of analysis, okay, understand what is happening right now, and decide that whenever right now it's suitable to use the robot or not. You can't tell me that you want to use robot when the market is market crisis, right, or financial crisis. You only use it when it's the right time. Okay, now let me go in details like what is a robot trading SOP. And this is one of the very important SOP when you want to do robots trading. In robot trading, we break it down into 4 main structures, and usually the structure started with the first one, direction. Direction in the most common trading, which is stocks market, we have this thing called as fundamental analysis. Now, fundamental analysis for stocks market is study what? The financial report. And for us, we study something like GDP, interest rate, ISM, CPI, PMI, whatsoever indicator lah. Is to know the country background, is to know how well the country doing, how well a financial book doing. If the result, right, the number here showing good, usually that will result in currency goes up or stock market goes up or etc. We look in terms of this kind of fundamental metrics. This is, yeah, Tina also putting in one thing, NFP. Okay, this is what we will call it as FA, fundamental analysis. Now, why people study fundamental analysis is to predict and forecast in future what will be the market movement in the future. That is the purpose of it, to forecast. Some people not good in fundamental, then look into that financial report like, oh, what is happening? I don't know. Okay, that's why people invented this thing called as technical analysis. For technical analysis, you might heard of this thing called multi-time frame analysis, such as like monthly chart, weekly chart, daily chart, 4 hour, 30 minute, and all the way down. Okay, and in this multiple time frame, they are going to use this thing called as chart pattern or candlestick pattern, right? And this two thing is also do the same job. Instead of looking into those kind of work, they look into the chart, which is visual inspection, to roughly know that based on the market movement like this, based on the past history, this is what likely to move in the future. Okay, based on the price movement, predict in future. That is technical analysis, TA. There is one more. We call this as a seasonal analysis. So for seasonal analysis, is something different, whereby it is using time to predict if it goes up or come down. It is based on time to roughly know that what time that it goes up, what time it goes down, and then how long this will last. Were it going to be last 1 day, last 2 days, or last this week, or last the entire month? It predicted that next month go up or next month go down. Okay, essentially the three of this end goal is the same, which is to quantify later today market will goes up or down. Later the market will be ranging uptrend or downtrend. Is to pretty much confirm, not say confirm, sorry, is to know, forecast potentially what is the market direction in the next few days. Minimum is 1 day. Okay, I have to repeat this. Minimum is always 1 day. You cannot predict what will happen in the next 1 minute one. Okay, so the purpose of direction is to predict in a big pictures what will happen at least 1 day or 1 week in the future. Okay, after you have predicted what will happen in a 1 week in the future, then this is a stage whereby you're going to use indicator. We call it as a strategy, a method to execute it. How? You have 2 ways. One of it is using mean reversal strategy, which is RSI. Okay, so mean reversal is RSI. Common example is 70-30. And then you're going to be buy low or sell high. Okay, it could be like this. Okay, a zigzag up, or it can be like ranging also. Okay, so that is a mean reversal strategy. Or if you prefer to have moving average, whereby when it is cross up, okay, 10, 20, when it cross up, you make for a buy. Whereby it is expecting that the market goes crazy up or goes crazy down. Okay, so it is a method. It could be combination of these two, doesn't matter. But the point is that once you know that, let's say that next week is likely to go up. Okay, you know that next week is going to go up. Then based on your own preference, okay, based on your own preference, which one is suitable for you? Let's say that you think that RSI is suitable for you, so you pick RSI at this stage. Okay, this is your weapons. You go for confirmation. Confirmation in a way, we call this as a setting stage. Whereby you do optimization. You find for your best setting. You adjust it, tune a bit. Okay, what is the best RSI value? Then you backtest it. You verify it. And then you know that if the market is indeed the best, and then the market, is it ready to use the strategy or not? You can't use the RSI when the market is like this, right? You can only use it when it's almost like this. Okay, it's uptrend, almost back to ranging. When it's tested, verify that market is almost ready to go in already. What you will do is to execute it. When in a sense, you go to buy and sell it. At this stage, you are using a robot to do it. So this is the framework of it. So far, is it clear? All right, if it's clear, type a clear in the chat box. If it is something place that you would like me to repeat, right, type 1 into the chat box if you would like me to repeat. So I just a quick repeat. It started, how you do trading, okay? When you want to use robot, it started to understand the direction. Let's say that the market moved like this. And for whatsoever analysis, you have forecast that it is going to be moving something like this, at least, let's say 1 week in the future. You forecast this thing will happen. And because you forecast this thing, that's why you have taken RSI as your weapon to enter the trade. And when you tune, right? This stage, you find RSI, right? You think that RSI 20 at H1 is the best because you have tuned it. And then you verify, is it profitable or not? Okay, you verify, is it profitable or not? Hey, you check already, it's indeed profitable. Oh. What do you do? Ask the robot that is working on RSI to trade for you. Okay, ask for a robot that is doing RSI to trade for you based on this setting, right? And you only forecast to here, right? After this date, you're coming back to forecast again. Basically, you can just stop here. You start here, and then you stop it here. This is the framework of robot trading in the holistic view. Anna, is it clear? All right, Mabel, is it clear? How about others? Okay, those that haven't typed in, is it clear or not? Okay, everyone clear already? Now, this thing is very important is because a lot of time, okay, a lot of time when trader get started with trading, okay, they are having a misconception whereby, oh, I no need to do 1, 2, 3 lah. I jump to 4 can or not? Can. You jump in, you go to fire only right? So I always say that you have to be prepared in advance to do all these things. And let's answer one question, right? Like Bert asking, how to predict 1 week trend? And I believe that a lot of you guys heard about this thing. I mean, if you haven't heard, let me ask. How many of you heard about this thing called as trend reversal signal? How many of you heard about chart pattern, candlestick pattern? If you heard of it, type a 2 in the chat box. If this is the first time, type a 1 in the chat box. Basically, it looks something like this. If you see this thing before, type a 2. If it is the first time, type a 1. Alright, I want to see how many of you see of this thing before. Okay, I mean, you see this thing, you use this thing, you type 2 lah. If you see this thing, you does not use, type a 1 lah. Okay, I just want to see how many of you understand this thing. Oh, still some of you guys type 1. Seen before, but can't remember and don't know how to use. Can robot track pattern? Okay, basically when I ask this question, you also type a 1 lah. Now, for those that type a 1, okay, let me explain first. What does this mean? In YouTube, in Facebook, Google, this is the one of the most creative thing that they can design in the trading. Basically, it telling you that, you know what, you do not need to learn a lot of things. You need to learn drawing. What does it mean? When you see this thing, alright, this is called an head and shoulder. When you see it move like this, then when it comes to here, it will come down. So it forecasts that it will come down. Okay, and something like this. When the price move like this, and it comes to here, with support and resistance, everything lah. It go above, it forecast, it will go to here. The purpose of this thing is to forecast, right? So this thing is what they call it as W bottom. This is what they call it as M top. All right, this is what they use to forecast. Now, some of them even come up with some of the very interesting pattern to tell you that, hey guys, when you see this candlestick pattern, right, it's going to give you 99.99% accuracy and a win rate. How this thing work? For an example, this is the most common candlestick that have been used in Malaysia. Bullish engulfing and then bearish engulfing. Meaning, one candlestick goes down, one candlestick goes up. It is forecast that the next few candlestick is going to be going up. Another one is like this. One go up, one come down. And then the next few candlestick will come down. Alright, so this is a common thing that you guys can see. And last time I learned this thing as well. And it looks amazing. Alright, wow, patterns. I like it. Alright, it sounds and looks easy to use as well. Let's give a try in the live market. So the chart here is USD CHF. And last time what I learned is that, wow, okay, so I use my robot, I see this thing. there is a W pattern here. Okay, and then I saw a support here, and then I saw a resistance here, and then okay, and what I see is that this is a resistance, and I can see that this thing has been break out, and the good thing is that it has break out, pull back to this area, and then from this area at the same time I go and take in a random indicator and say that, oh, this indicator is going up. Whoa. So based on the theory itself, when I see this thing, it means that it is a good opportunity to buy and forecast to go up already. Okay, and I even can see that I can have buy 1, buy 2, and buy 3. I mean, it's a signal point. I 1, 2, 3, W already. When I see W, I expect the forecast to go up. That's why I make a buy. So where did I put my stop loss? Of course, I will go to put a stop loss slightly below the entry price. So this is my stop loss. Okay, let me erase again and draw again. First thing first, what I'm seeing is that I see a W. Okay. Second, I see this resistance here. It has breakout, pull back over here. And because this is W, I forecast that it will be uptrend laterwards. So I make a buy trade with a stop loss below here. This is my entry. And this is my take profit. Is everyone following? Type a yes in the chat box if you guys can follow up what I'm saying here. Oh yes, Okay. Next day I wake up. It become like this. I'm shocked. What happened on that day? I saw W. Okay, it had pulled back. I make a buy trade. Now the price rushed down. My stop loss is almost hit. Questions. If this is your, right? If this is your trade, what would you do? Would you buy more? Type 1. Would you sell? Type 2, right? If you go 1000K lah, right? Just forget about it. Remain the stop loss, go to sleep. Type 3. Buy more means dollar cost average. Okay. Sell more means close the trade, reverse it. No, wrong already. Close it, reverse. Sleep mean, doesn't care lah. Go to sleep lah. Alright. So Kumar is 3, Jason is 3, Kevin is 3, Chenko is 3, 3, 3, 3. Boon is buy more. 2. Wow, a lot of you guys type 3. Okay. You guys type 3, right? Now, this is the result. Those that type 1, congratulations. Okay. Those that type 1, congratulations. You buy more, you die more. Correct? And how many of you have experienced this thing? Alright. In fact, the analysis just now is so solid that I follow every single thing and still in big losses. It's not small losses. If it's small losses, I can accept that, but it's such a big losses that I have to screenshot to take as a case study to show you guys. And I feel like the market is betraying me so much. How many of you have the same feeling, right? You feel like the market is betraying you. Study so many things, still like this. Type of me into the chat box. Okay. You feel like the market is betraying you. You feel like the pattern is not accurate. And you know what? I take this thing, I go and ask my last time, right? The one that teaching me. I ask, hey, why I'm losing? I saw a W, right? I saw an indicator here and there. He said, listen, wait. You know, you study wrong already. It's not accurate. Let me show you. Then he started to erase my thing. He tell me that, listen, this one is not valid W. You see this thing? This is a M. So you should make a sell here. I said, Halama. If I can see this M before the M come out, of course I sell already lah. I can't even see that M. At that time, what I see is until here only way. Now you see the result, you tell me it's M. Of course you're right lah. That is actually how I feel last time. Okay. So in the end, I go and sit down, I study back. What is the thing that goes wrong? And in fact, just to let you guys know, a reversal pattern or any pattern that you learn, everything happens with a condition. Everything happens with a condition and need to be in the sequence. For example, right, this one, you can't just look into the pattern, right? It doesn't work. Why? Because it started with first thing first. What is the overall trend first? In this way, right, what you can see that the overall trend is actually a downtrend market. Okay? And from downtrend, first thing first, in order the reversal to happen, it need to have ranging. In a way, if it's downtrend, it need to be in ranging first. And after ranging, it need to be in the valid W, which is like this. Okay, later I'm going to talk how it's a valid W. And when you see this valid W, it need to go for second step, break out, and then pull back. Okay, break out and pull back usually is a pair lah. So it goes above and pull back already. This one, this two. And then a trend started, meaning that this thing happened. Okay, when you can see this thing already happening, this is where you can start to confirm to buy. And then why you buy is because of this W. In a way, in order for you to quantify that this is a valid W, it need to be in the W first, and then need to be uptrend, breakout uptrend first. Then actually the number 4 step is that it need to maintain the momentum to go out, and then back to a ranging, something like this. Then only you can confirm that this can buy. Then this is the right W. Now the truth thing is that if I wait until 3 and 4, might as well that I just don't enter, right? I have been missing out half of the pie, right? This is half of the profit that I'm missing out. This is just the remaining 8. Why should I still using this? Logic or not? So that's what I'm going to bring up. In the way, right? When you're using any kind of strategy, simply means don't use it when you don't understand it. If you don't really understand into that details of level that I've just mentioned, right, just don't use it. It just confuses you a lot of time. Okay. Same thing. It's kind of like when you are sick right now. Okay, you would like to have solutions in trading. Same thing. You would like to have a solution that can solve your immediate pain in terms of your trading, in terms of accuracy. You would like to improve as much as possible. That's why you take this pattern and apply directly. You hope that this thing can plug and play. But the question is that if this is a medicine, before even telling you what is the side effect, would you simply consume it? Right? Type a no into the chat box if you will not simply consume it. Okay. And of course, we have to know at least how it works first. In very detail, we need to know why it works. Okay, why it works. Like Chana said, big liquidity traders know that retail traders where they put the orders. Means support and resistance and supply and demand zone, right, is the target they are looking at. Okay, how do we counter this thing? Now, to counter this thing, you have to know why people design all these things at the first. Why the candlestick will goes up, why candlestick will goes up. And just simply mean doesn't work lah, right? This thing. No need to look at all these things. No need to use, and better don't use it. It makes your life much easier. In the next few slides, I'm going to teach you guys how to do this and how to actually stay focused in the right market. A lot of time, when I started my simulation, a lot of people say, oh, Eason, cannot lah, the candlestick move too fast lah. The reason why you feel it's too fast, it is because you are lost focus. You focus on the wrong thing. That's why your brand is like overheated. If you can focus on the right thing, which is the price movement itself, you feel the price move very slow one. Okay. Now, candlestick. Candlestick we categorize into 4 points: open, high, low, close. OHLC. How? Upward candlestick, a green candlestick, it opened at this price. The lowest that it had go is this price. The highest that it had go is this price, and then it closes at here. Okay. And moving forward is that if it's down candlestick, it open here, close it at here. It's coming down. And this is the highest it had go, it has the lowest as well. So this is like a normal candlestick. And let's just give a drawing here. Let's say that this is a daily candlestick. Okay. And a normal daily candlestick, how it goes, how it move in a day. Starting here, come down, goes up, back down. Or starting here, goes up, back down, goes up to here. Okay, guys, in a daily candlestick itself, which one that you think is 90% most of the time is going to happen? A or B? Meaning that in a day, how would the price move in a day? Is it A or is it B? Type into the chat box. If you don't know, type a C also. Okay. I mean, if you don't know, simply guess lah, right? A or B. So Fakri type B, Chengkok type A, George A, Wasan type B C. Alright. Stephen A and B. Tivok A, B, A, B. Right. So we got a mixture of the answer here. To let you guys know, the answer is A. 90% of the time when you see this candlestick, it is, when you see an upward candlestick, it is mean that it is a normal price movement if it's like A. When it's normal, what will happen? Market trend continue to go above. Only this 10% of chance will happen. And when you see this thing, it's actually what they call it as a abnormal candlestick. And in a way, this is also called as a reversal candlestick. So one of the popular example is that if you would like to know that if the current market itself will reverse or not, okay, you want to know that market has been goes up so high, will it reverse or not? You just focus on the latest candlestick. Is it moving like this or not? It takes time one. It takes time for it to like goes up, then shut down, goes back out again. Like, I think you guys can see this price movement report before, right? It goes up, then spike down, then go back out again, then it slow down here, then next day like down already. Why? It's because of this thing itself happens so uniquely. Okay, it's so hard for this thing to happen. That's why when you see this kind of candlestick, it means that the market is almost reversing. For a downside candlestick, it is looks something like this. Okay, and which is very similar, right? A and B. Of course, A is 90% of that going to happen. B is, we call that abnormal. And most of the time, market will reversal when it is on B, whereby it is on the abnormal candlestick. When this kind of abnormal candlestick happening in the live market, right? Especially in ranging, it is much easier to reverse on. Okay, that's why you have to see law, right? In within the candlestick itself, in a day itself, is moving upside or downside. Okay, like normally like this or abnormal like this. If you can justify within these two, no need any pattern. Right? You can almost classify all these things already. And why this thing happen? You should think of this way. Every single minute of the price movement incur cost one. You have to know, big player, even though they can shuffle and they can push the market, every single price movement they push is going to cost them money. So if they want the price to come up, let's say that the seller would like to push the price to come up, Of course, they would prefer to, as simple as if you help me to push out the price a little bit first, okay? Morning you push out a bit first, nighttime I just click, smash you down, and then in the end I take profit, goes up. That's all I want to do, as simple as possible. They won't do this thing one. You come down first, I buy you all the way up, and then I sell you back all the way down again. Then it goes back up. This one is what we call as additional costing for them. So that's why if you see A, trending. If you see B, reversal. There is actually another pattern for engulfing. Okay, I just do a quick one. Now there are two types W. One, okay, so this is down candlestick, this is up candlestick, right? So a down candlestick can be drawn in terms of this way. This is a down candlestick, number one. And then this is another upward candlestick, a normal one. Like this. Okay. And another one is something like this. This is a downward candlestick. And this is a upward candlestick. Okay, guys, type in the chat box. Within these two candlesticks, right, A and B, right, within these two type of price movement, which one did you think that most likely to be the real reversal signals? Type in the chat box, A or B. Which of this is the real reversal signal that is going to happen truly reverse to go up? A or B? Wrong. The answer is B. Why? If the market want to reverse, it depends on the price movement. Only when the movement itself is so abnormal, that means the buyer and seller is come to fight already. This thing is just normal pullback. It may continue to come down one. Okay. Why this kind of price movement will make it even high tendency to go up is because the buyer is aggressively buying at the early stage already. That's why the price goes up first. Okay. And then the seller not happy. Hey, no, this is my fight. I want to push it back down. The seller push it back down at the bottom part. Buyer come in again. And then buyer push all the way up. Then they take profit here. Meaning that first buyer in, second buyer in at the bottom again. They are dominant already. This one is not dominant. It just come down, they buy at the bottom. That's all. In a way, this thing have even higher chance to be reversal. Okay, that's all I mean. Meaning that next time you see the price as ugly as possible, okay, if the price move very ugly, it just means that it is more and more chance to reversal. Okay, so that's explain how this thing works. And we actually have the other pattern, but what I would like to summarize here is that if you understood what I'm sharing with you, right, the reversal pattern itself is just nothing but overly simplified of the price movement. That is what they want you to see and may not necessarily to be a real story. Kind of like right now you are doing online Zoom meeting with me, right? I don't know if you are sitting there with your cat or not, but this is what they want you to see. They want you to see at this candlestick, this kind of thing, but the truth is that the real life candlestick is so ugly, right? And right now, I want you guys to take a step back. Forgot about it, right? Focus on the price movement itself, and that is enough for you to be profitable to analyze the market already. And essentially in trading, right, all you need to understand is to follow the rhythm of the market, which is the pace of the market. Just like how you see the price moving here, you follow the pace that how it goes. Into simple formula, please take note about this, right? Very simple. When the price goes up, it will steadily goes up. When the price comes down, it will steadily goes down unless there's a support and resistance. Okay, meaning that this thing will just continue flow until there's a support and resistance to stop you. Alright, and if you can understand what I'm sharing here, type rhythm in the Java, that means, or type SNR in the Java, type SNR in the Java. Meaning that this thing, right, this price itself, the robot, I mean, this is how the robot analyze also. When it up, it will just continue to buy. Okay? Until there's a resistance, then it will start to turn to sell. There's a support here, it will turn to buy again. Okay? Now, that's all I'm saying. Okay, that's all I'm saying. Is higher time frame support resistance more reliable? Put it this way. A higher time frame support resistance, let's say that daily time frame support resistance is the same as 1 minute support resistance. Let me repeat again. The support and resistance that you see in the daily time frame is the same as a 1 minute time frame. In a way, you can reverse back. The 1 minute time frame SNR is the same as daily time frame SNR. Let me prove it to you guys. Let's take gold for example. Okay, gold got a very short support resistance. Okay, now for those that don't know what is support resistance, basically you can see a market like a ping pong, right? Ding dong, ding dong, ding dong, correct? And what people will do is that they will draw a line at the top and the bottom. So I just simply draw lah. Okay, so this is a daily time frame gold. And what you can see that the price is indeed moving in a ding dong manner, right? And you can draw to here. Ding dong, ding dong, ding dong. Alright. And in a way, when the price goes to the highest, it will come down. When it comes to the bottom, it will go back up again. This is a daily time frame resistance. Now, if I change it to 4 hour, okay, maybe this is too big. I draw to like this, okay, I string a bit. Now, this one and this one is daily time frame resistance. I change to 4 hour. Is it still a resistance? It is. Okay, if I want to be go market too big, so let me just focus on this part. Okay, so like this, can see, right? If you guys can see this, right, type a yes in the chat box. Meaning that right now I'm drawing a support resistance somewhere like this. Okay, the price is like ding dong moving in within this range. Okay, if you guys can see this, type a yes into the chat box. Okay. Now, support resistance means this is the support, this is the resistance. Okay, ding dong. And the way that the robot analyze is that this is daily time frame, this is 4 hour time frame. Is it valid or not? Still valid, right? So, support, resistance. This is a 1 hour time frame. And 1 hour time frame, is it still valid or not? Still valid, right? Go to 50-minute time frame. Still valid or not? Ding dong. Still valid, right? Go to 1 minute. This 1 minute you have to drag a bit up. Okay, go to 5 minutes. Okay, it moves like this. Is it still valid or not? It's still valid. It is still valid up and down at the same range. So what does this mean? In a way, okay, if you truly understand the meaning of support and resistance, regardless what time frame, it is all the same. It is all the same. The differences between time frame and time frame is just zoom in and zoom out only. Why I say this? This is a daily. Okay, this is a daily, and you see how it moves. Goes up first, come down, go up, down, up, right? So it's up, down, up, down, up, down, up, down. Go to 1 hour, up, down, up, down, up, down, up, down. Okay, now if you don't know what I'm saying, maybe I just throw in. No. Up, down, up, down. All right, so this is what I'm saying. Like this, I go to 30 minutes, same or not? Same. 15 minutes, same or not? Same. Just like I haven't proved it to you guys, right? 1 minute. Not sure if I can drag this. Okay, you see, I cannot see already. 5 minutes. Up, down, up, down. Everything the same, right? Everything is the same. Regardless what time frame you go to, is the same thing. You see, if I go to 2 hour, 1 hour, 30 minutes, 15 minutes, it just keeps zoom in, larger and larger and larger and larger. That is just what the time frame means. How many of you actually learned something from here? Right? All right, welcome back into the room. If you guys can hear me, type a back into the chat box. Okay, so if you guys can hear me, right, type the back into the chat box. Okay, now in the next topics, what I'm going to teach you is a topics related to confidence. Okay, this is a very interesting topic. Okay, maybe I ask this question: how many of you want to trade with full confidence without any stress or emotion? Type the me into the chat box. Okay, type the me into the chat box. If you have already back in the room, type a me in the chat box. Now the reason why I put up these topics is because I noticed that a lot of you guys that fill in the form, right, is a existing trader. You have been trading like 3 months and above. More of them trading around 1 year period. And the problem that you face is confidence. You have no confidence to enter a trade, especially you are not confident that the decision that you made in the trading is right or wrong. And you are seeking for a solution to make a better decision. And today's session, right, we're going to extend a little bit further, 30 minutes later than what we explained. But this is for me to add in more value to you guys. All right, is it all okay? Okay, is it okay that I extend 30 minutes more today to teach you guys more stuff? Okay, thank you so much. So right now, I'm going to teach you guys a secret strategy to forecast the future of the price movement without the need to open a chart and even without the need to study fundamental. Okay, and this is an amazing strategy, and even a 7-year-old kid can understand this. Now, we have gone through a lot of study. How we come into this strategy is that we study a lot of markets and we found a behavior within stocks market, cryptocurrency, forex, commodity, gold, silver, crude, everything we study. And we noticed that there is actually a behavior that repeat by itself. The behavior itself is that sometimes technical analysis will fail one. Regardless how many exercise you do, how many accurate analysis you put in, just don't know why the technical analysis will always fail. And the best part is that it always fail at the same time. Then I started to realize one thing: technical analysis is not always the truth. Meaning that it's good to have, but it is not always right, and it's always fail at the same time. That's why I've discovered this thing called seasonal effect. is a time where the technical analysis will fail, but the history repeat itself. How many of you heard of Chinese metaphysics before? Or something like feng shui, like qi or type of the me into a chat box. If you actually heard of this thing or you learned about this thing before. For those that don't know what is this metaphysics all about, right? It is actually something like fancy drawing here. And it's a very beautiful drawing. Study on the ancient time, what will happen some point in the future. Is what they used in the past to predict will it rain or not? Is it good for farming or not? Okay, it's used to predict the next seasons. And I have been studying this thing as well. They do apply this into trading. At a certain perspective of time, certain thing will happen. Let's put out some common things. In trading, all right, especially for Forex, in the season analysis part, you might heard of this thing called as market overlap. What does this mean? A lot of time when you want to do trading, right? First thing, very important, you need to find out when is the time that have the biggest volatility. You want to find out that what is the time that has the biggest movement. Because the bigger the movement, the easier to trade. And the volatility is equal to movement. The movement is equal to volume. So think about this. If you want to be trading easier to profit, you trade on a period that have the highest volume. When is the time to have the highest volume? Usually when two global market overlap. For example, when Australia, New Zealand, Japan, their working hour overlaps, which is 7 to 8 a.m. GMT plus 8, Malaysia, Singapore time. And then this period of time usually have the easiest to trade for these three markets. For market related to JPY, Euro, and then GBP, 3 to 4 p.m. is the best time to trade because this is the period of time where the Euro, which called a London session, has the most people trading on it. And market related to USD, CAD, and yeah, CHF is somewhere here. USD and CAD, right? They are on the New York session, which is 8 to 11 p.m. And in fact, within these three sessions, the session that have the most player, the easiest time to trade to be profitable is actually just 8 to 11 p.m. That's why in Malaysia, right, you are actually a bit of advantages whereby you can go to work in the morning, come back from work 6 p.m., go have your dinner, okay, set up your desk at 8 p.m. and then you can start trading. Because the rest of the time is meaningless. There is no player there. There is no trader there. There is no volume. When there's no volume, it's damn hard for you to trade. That's why I always recommend 8 to 11. Some people even say that, Ethan, did I need to stay overnight to do trading or not? I will say, no need lah. After 11, market no volume also. No point that you see in front of computer. The price also very slow. I have been there before. I know it's very slow. So I think that it's no point for you to stay over there. Alright, you can still have your good rest. Now, how about stocks market, crude oil market? You need to know stocks, crude oil market, these are the market that heavily driven by US investor. So this US investor that are usually been more active within this period of time, right? 9:30 p.m. to 4 a.m. It's a little bit different compared to Forex. But then the easiest way for you to understand this is that you can look into the volume indicator. Okay, this indicator itself, you can actually notice that what are the period of time that usually have the peak. Now this is the S&P 500, and you can see that around 8:30 p.m. to 9:30, right? The peak is usually crazy one, like something like this. Okay, it's like the whole day no volume, suddenly have a big volume jump in. That is a period of time all the trader, all the gambler, all the investor jump in at the same time. Okay, so why not join that game? Jump in together. So that is a period of time, 8:30 p.m. to 9:30 p.m. If you want to sleep early, you schedule your time earlier lah. Alright. You basically know that this is the time to trade. So just trade on that period of time. One additional topic that I'll put in, which is Friday. How many of you actually notice this thing? When you're trading, right? Until reach the Friday, the Friday very slow one. Monday to Thursday, very smooth, right? Can be profit. Friday, like damn slow, way. Price doesn't move one. Okay, even move a bit. Okay, how many of you experience this thing? Okay, type Friday in the chat box if you experience this thing. And this is the truth, because in the real life situations, Friday is TGIF. Too good is Friday. You know lah, right? US trader, US people, right? What they will do? They will go for party. Okay, they will go for party. So that's why they slow down lor. China, Japan, there, the big country, right? They still also in holiday mode already. No one will trade. I know lah, it's a bit funny lah, but then the truth is like that lor. Everyone want to go holiday ma, right? So you cannot expect high ROI on Friday, but what you can expect is that this is Monday and this is Friday. Early on the Monday, market will be slow. Then the next day become like this. Then slowly back down to Friday. So this is a cycle of the market. If you want to trade at the late on Monday and then early until the early of Friday. Okay. Unless there is a monthly news come out. Yep, correct. Unless there's a news come out, or else market will be very slow. Next thing that I want to talk is about seasonal effects when it comes to investment, which is a buy and hold robot strategy at least for a month, so that you're able to ride on this effect, on seasonal effect. Okay, and basically what you need to do is just to wait until the right time when the robot come in, execute it. Okay, just to wait until that period of month. Let's look into this case study that I performed back then. Now, let's assume this is your portfolio at minimum risk, at zero commitment at all, and basically you do nothing at all. All you need to do is to open account, pump in money, go to sleep. Okay, then by the end of the year, you withdraw your money. That's all. Meaning that by doing nothing from 2011 all the way to 2022, okay, you are profiting 12% on average for portfolio A, and then you profit on average 9% for portfolio B. Doing nothing. Okay, not even trading, just pump in the whole year until the end, just withdraw it. How many of you think that this is a good return, right? I mean, what is your opinion about this thing? Right, type in 10 if you think that this is very good, type in a 5 if you think that this is good to have, and type in 0 if you think that not good. I can do at least 2 times better than this. Right, type in the chat box. What is your view on this kind of portfolio? All right, 10, 5, 5, 5. Okay, very good. Now, this thing, all right, this thing itself is do nothing, literally doing nothing one. This is what we call it as S&P 500 and then Dow Jones, which is the US stock index. Now, I'm showing you guys this thing is because I want you guys to have a benchmark result. If you put money here, nothing at all, end of the year you can withdraw this money. That means that the baseline of you to do trading is at least 12% ROI in a year or 9% ROI in a year. That is the minimum return. And this one minimum return, not even consider the index, what do you call it? Dividend from the index one. Okay, but we just take it as minimum return, just buy and hold all the way. And now, this is investment. What if that you involve in trading? You go and buy S&P 500 at the time where it goes up. and then you sell it before the time it will collapse, your potential ROI is even more crazy. And you know, trading have leverage, meaning that this is 1-to-1. You put in 1,000, you make 1,000 back. Okay, but in trading, you can do 1,000 put in, leverage will be 10,000 to get 10 times more profit. So how does it work? When you do S&P 500, right? Okay, we have a research. Okay, this is what we have research about. This is S&P 500. Basically, you just look into the black dot. Okay, this black dot reflecting the average return of that particular month, meaning that this is the average return, right? This is the baseline 0, this is above 0, this is above 0 as well, this is above 0, and this is below 0. Okay, so the higher that it goes, the more the tendency that it will be a uptrend movement. Okay, on that particular month. So right now we are at the month of April. Okay, so we are at the month of April. So based on this, on average, right now April S&P market or goes up or goes down. Type in the chat box. In April, okay, in April, based on this chart, is likely to goes up or goes down. If you don't understand, type a no into the chat box. Okay, how to read this thing is that as long as the black dot is above it, it means a buy. The black dot below it, it means a sell. This is buy, buy, sell, buy, buy, nothing. Buy, buy. Okay, as long as it is above is buy signal, below is a sell signal. Okay, the higher it goes, the more likely that it will goes up. The lower it goes, the more likely that it will comes down. Now, again, questions. Right now, it is likely to goes up or goes down. Okay, so you guys can see already, right? In April, okay, based on the statistic, April is more likely to goes up. Why? It is because that it is above it. Okay, it is above it. Then we have to look into certain visualization. Let's do this in the training view. Okay, let's put in an indicator. So this indicator, when you type in 10 years, something like this, okay, this thing should pop up. So just click on this thing, and then this table will come up. Now just click once because it needs some time to load it up. Now, this is S&P 500, okay? And based on this table, right now we are in April. Okay, right now we are in April. Let me change some chart. Okay, so when you see this thing is loading. So right now we are in April. And can you see this number? All right. This number indicate that in the past 10 years, what is a percentage average go up or goes down? Okay. Now, this is green, right? It's positive, right? It means that April will goes up. The higher the number, the higher the tendency that goes up. So guys, a question. If you would like to trade in S&P 500, when is the best time to buy S&P 500 based on the last 10-year database? Okay, when is the best time to buy S&P 500 based on the last 10-year database? I mean, which month is the best to buy? Okay, finally I saw the right answer. Now the answer is by T1 is actually March. You guys see this? The concept is slightly you have to think one step in advance of everyone, you know. You cannot do the actions after people already do it. Meaning that you see from the entire view, this month have the lowest of the entire month, correct? It have the lowest downside move of the entire years. And from here, you can see that March onward, almost every single month until April is all going up. So what you do? Work hard until the next year, March, you come in. Okay? You pump in, not to say pump in immediately lah. Wait until 1% drop already. 1% drop okay, pump in. Drop one more, pump in. Drop more, pump in. What people like to use in the market, stock market, dollar cost average. Why you are so confident to pump in? What if they keep drop? Drop then drop lor. April goes up, May goes up, June goes up, July goes up, August goes up. 5 months goes up. What should I worry about? Just pump in pump. Okay, I only worry one thing. Not enough money to pump in already, Wilson. Work harder lor. Go and drive the Grab as much as you can. Then pump back the money lah. Okay, this is what we call an aggressive type of trader lah. But then the true thing is that you can pump in every single week. What we call that as a dollar cost average on a weekly basis. Okay, and then you just let it fly. And before end of September, right, maybe like around 0.5% on August here, you just cut. Then you are pretty much happy. And just now there are some people say it's November, right? It's actually October. Why? You take the profit, go and happy, enjoy your life already, can? Hey, market drop cap hand. Thank you. Hey, August drop. Thank you so much. Then you come back in here. November, December, January, February, all go up again. Thank you so much, market drop. Thank you so much. Then before March, withdraw. That's all only. And all you need to do, okay, is just to set up the robot in this period to be buy only. This one also set up to be buy only. Okay, and until the next period. And the thing is that the robot itself, some of you guys may be asking, right, would it be great that to actually make a sell over here? I will say that S&P 500 better do against the Federal Reserve lah. You may be losing money 1 or 2 years, doesn't matter. Because this thing has been happening for 10 years. In 10 years, how many times they can lose? So damn less, right? Don't worry. Federal Reserve will cover you. I mean, that is their life. You guys have been seeing this more and over and over again, right? Every single time, financial crisis, who saved them first? Federal Reserve. Every single time, bank not enough money, who saved them? Federal Reserve. I mean, they are keen in printing money. They know what they should do. They print, you win. Okay, that is what I will always say. Okay, hopefully they always print money, because when they print, now you can always win. If they don't print, you cannot win. Okay, is it clear? Right, this part, is it clear? If it's clear, type a clear in the chat box. Alright, if it's clear, type a clear in the chat box. Now, next thing, this is gold market. Okay, this is gold market. When is the best time? Okay, first of all, I would like to emphasize that this is not financial advice and this is not a trading advice as well. It is just a survey, and also from our analysis, from our database, we pull out this result. We would like to show you guys this benefit. Okay. Now, this thing, what you can see here, we are at April. Okay. And along the entire whole 10-year basic, right? whole 10-year basic. When is the best time to buy gold? Okay, when is the best time to buy gold? Type in the chat box. Okay, so the answer is December. Why? Now, when you look into this kind of table, right, you have to look at where is the leader first. The top is at here. The bottom is at here. Okay, and the good part about this market, right, especially for gold market, is you can notice this thing, right? In social media, walao, the whole mid-year, early of January, right? I believe that you guys see this a lot of time. Wow, early of January, a lot of people say, hey, buy gold, right? Hey, trade gold. Wow, why they are so kanchiong, everyone? This is the reason. Okay. And then right now, you ask, hey, how was your gold trading? That doesn't work one lah. Don't trade gold already, I closed trade already. Right? Do you guys notice this thing? Why? You see, in between, gold market doesn't move one. Up a bit, down a bit, up a bit, down a bit. If the gold market is like this, that means, what does that mean? That means no point to trade in between, right? So those that type May, June, right? Low volatility, not good to enter. You see, September, October, November, December, drop. Walao. Please, market, drop more. Don't ask me why the market go. Don't ask me why the gold market will drop in the end of the year. But I just know that it will drop. Hopefully that it will drop. Okay, it can drop the most, please. Okay, I might entering sell here for me. Okay, I might be entering sell only. As much as possible, please drop a lot. Why? Because this here got 3% up ma. Okay, when it goes up, next month September, drop until December, stop it. And then you see January, February, March, April, 4 consecutive months come in. We call this as a buy only opportunity. So you set a reward to be sell only until December, swap the next one, go to buy only. And then in the middle of the year, do nothing. Go and hustle as much as you can, right? Go and ask boss, I want to get bonus. Don't want fine. I got from trading profit I move on to another work. Okay. And then in between you work lor. Alright, you work, you get your profit. You get your salary in the back, you can invest later. This is what we do in the robot trading. It's actually we plan in advance on our calendar already. What should do, next month what we can do, alright? And then what are the months that buy only, sell only, prepare in advance. Okay? So this is the seasonal analysis. And it's indeed a very, very powerful tool that I would like you guys to master it. Okay. Now, this is a chart for... Okay, so this is actually the gold seasonal chart. And in fact, alright, what we have been discussed is that this thing itself is being repeated 7 out of 18. Meaning that in the past 18 years, me and my team sit there, have been trading all the way. We've noticed that it is 17 out of 18 of the chance going to be successful. In a way, it is a very, very high chance opportunity. And that's why people are so kanchiong to trade at the early of the year and the end of the year for the gold market. If you guys notice this thing in the market. Okay, and this is one of the small reasons why I'm trading 150% ROI in a gold market in just 2 weeks. Basically, when I see this thing, I already forecast in future what I am doing already. And in fact, just to let you guys know, right, if you want to be even more accurate, you need to get into this. You can study until weekly and even get into daily. so that you're not just able to see exactly what will happen on this month, you are also able to forecast what will happen on the next week, and even able to forecast what day will goes up, what day will comes down. Because basically the history repeat by itself and the human behavior remain the same. All right, so that is why seasonal analysis work. Now, how many of you feel that this seasonal analysis is very powerful, and you can sense that it can make trading super duper easy to analyze right now to predict the future market movement? Right, type of the easy in the chat box. And you can see that this tool is making you the confidence to predict the future market movement easily. All right, you can see this easy tools, right? Type of the easy into the chat box. And the reason why it's so important to bring out this season analysis in the robot trading is because I want you guys to see that the robot can just set up to be buy and sell at certain month, certain week, and even certain day. After you set up, you can enjoy your life, enjoy your time, enjoy the precious moment with your family. A lot of people are so obsessed about settings, about indicator, about analysis here and there, but actually it's not about indicator.